Good evening, friends. Today I am going to discuss about investment analysis. What is the definition of investment analysis? And what are the objectives of investment analysis? And what are the types of investment analysis? Basically, the definition of investment analysis is it is the process of evaluating different financial assets such as stocks, bonds, projects, or businesses to determine their profitability, risk, and suitability for investment. It also helps investors to decide where, when, and how much money to invest to achieve maximum returns with acceptable risk. So, when you are investing your money in a particular area, you have to decide when to invest, where to invest, and how much money to invest so that you should get the profit. So that is the definition of investment analysis. Now coming to the objectives of investment analysis, the main objectives are maximum return, minimize the risk, efficient allocation of funds, future financial planning. First one, maximize the return. It earn the highest possible profit from investments. So when you are investing the money, then the investor will think about the highest possible profit or maximize a return. So that is one objective of investment analysis. Second one, minimize the risk. So you have to think about the financial losses. So nothing but to reduce the chances of financial losses. So this is the one more objective of investment analysis. Third one, efficient allocation of funds. So when you are investing the money, you have to think about the productivity opportunities. So how much you want to allocate the fund in a particular area. So that is also one of the major aspect of the investment analysis. Fourth one, future financial planning, nothing but long term goals like retirement, expansion, or asset growth. So when you are properly investing the money in a particular area, you have to think about the long term goals so that after 55 or 60 years you should get the profit or you should get the retirement amount. Likewise, you have to think about when you are investing in a particular area. That is nothing but objectives of investment analysis. Here we are having four major objectives of investment analysis. Coming to the types of investment analysis, first one, fundamental analysis, second one, technical analysis, third one, risk analysis. So coming to fundamental analysis, you have to think the basic that we you have to think about the basic about the particular company or a project when you are investing the money. So before investing the money, you have to evaluate the good health of a company or a project. Like you have to check the financial statements such as balance sheet, income statement, cash flow statement. If we take the best example, analyzing company profit, revenue growth, and debate before buying its shares. So directly you cannot see the financial statements of a particular company. So you have to think about the profit, revenue growth, and the debit before buying its shares. So this is about the fundamental analysis when you are investing the amount in a particular area. Coming to the technical analysis, you have to properly study price movement, and market trends using charts and indicators. So you are when you are coming to a technical point of view, you have to check the price movement and market trends by using the charts, pie charts, and different indicators. So mainly you have to see in stock or forex markets. So if you take the best example for technical analysis, using moving averages or trend lines to predict stock price movements. So price movement or market trends, if you want to predict, then you have to use moving average and trend lines to predict these stock movements. So coming to the last one, risk analysis is nothing but it examines uncertainty and potential losses associated with an investment. So uncertainty will be plays a major role in the industries. We don't know the uncertainty of a particular company, when it will be gain or when it will be lose. So that are the common risk which will include market risk, inflation risk, interest rate risk, liquidity risk. So these are the common risk coming to the risk analysis. That is the end of this session. We'll meet in the next class.